The bell is indicating that it's about a 0.25% gain.
Nifty's up close to about 40 points. The Sensex is higher by nearly 100 points.
The market is up and about.
The market is at the day's high, and it has very smartly recovered a lot of the losses that we've seen yesterday. Pretty decent day, and one part of it was entirely the MSCI play.
India outperforms is on its own steam, rallies on MSCI rebalancing, which is expected to bring in inflows of $2.5 billion into Indian stocks. Sensex and Nifty soared 1%.
Kotak Mahindra Bank rallies 12% on potential MSCI inclusion, which will bring in nearly $500 million in strong second quarter numbers. Brokerages upgrade the stock.
Nifty Bank soars 3% as many stock companies are likely to be beneficiaries of the MSCI rebalancing. Many banks and NBFCs also say there is smooth completion of the interest waiver scheme. CRISIL says government has to give 7,500 crore rupees to be passed on to borrowers.
CET rallies post a strong second quarter earnings, but does a complete round trip to give up all gains and ends only 1% higher. It's beaten expectations on all parameters. M&M Financial falls 4% on a weak second quarter, reports lowest loan growth in 4 years.
Festive season sees two-wheeler sales stutter, but four-wheeler makers like Hyundai tell CNBC-TV18 that sales during Navratri are sharply higher this year, and keeping up with demand is posing a challenge. Well, those were the top 5 headlines from Dalal Street on a day when India outperformed practically every equity index in the world. The Sensex and the Nifty regained most of yesterday's rather big losses. Welcome to Markets Today, the show where we will tell you all that happened in those 6 absolutely exciting hours of trading in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair joining from Delhi. Hi, Prashant.
Lata, hi. All other parts of the world, all other equity indices felt the strong pull of gravity, except here in India. And we were sort of floating somewhere up there. I mean, we'll discuss all of that, what happened, what was the biggest trigger, and there was one clear trigger. But let me just tell you what's lined up here over the next 30 minutes in terms of opinion. Mark Matthews of Bank Julius Baer and company weighs in. Mihir Vora of Max Life Insurance also weighs in on the market going forward. Krishnan Sitaraman of CRISIL Ratings and Y.S. Chakravarti of SHRIRAM City Union Finance tell us about the interest waiver completion in corporate opinion. Tarun Garg of Hyundai and Manohar Bhatt of Kia Motors tell us how demand is looking for the four-wheeler sector. But, you know, all of that opinion in just a bit. As always, let's spend a minute or two talking about the day itself. Lata.
Well, as you said, India shines and shines almost alone a star. The rest of the world was bedeviled by the rise in virus cases, both in Europe and in the US, and the chances that this will lead to further lockdowns, further fall in GDP growth, and further fall in corporate earnings. But no such worry in India. Why? There is a pure technical reason for that, and that you heard that from Prashant and from the headlines. Just 4 words to describe what went for the bulls. MSCI, Morgan Stanley Capital Index. Now, this is an index which many funds all over the world follow when they want to invest in various countries. You know, every sovereign wealth fund can't do research in Asian paints in India and some other Pakistan paints in Pakistan and some Ceylon paints in Lanka. What do? They just look at the MSCI and apportion their money as the MSCI, weightage weights various countries, and within each country, each stock. So what we now realize is that the MSCI is going to rebalance the various country weights, and India's weight as of November 30th, when the rebalancing is expected, will go up from 8.1% to 8.7%. So every time a foreign fund puts in 100 rupees, it used to give 8.1 to India, now it will put 8.7. That 6 basis points is about $2.5 billion estimated that can come to India. Now, why this rebalancing? In the budget, the government made an important announcement which is now getting recognized. What it said is, what is the FII limit in every company? Until now, it was set by the board of the company itself. Okay, so Kotak Mahindra says, I will allow only 25% sales to FII, and Nestle says something like that, and every company, SHRIRAM Transport says something like that. In the budget, the government said this cannot be left to the boards of companies. There are sectoral limits that the government has. In banking, you don't want too much FDI. You want more of Indian banks. Likewise, in telecom, you have a 49% FDI. You have limits for various sectors. Those sector limits set by the law of the land will be the FPI limit. You can't have a separate company-specific limit pushed in by the board. So what does that do? It throws open space for FIIs to come in various companies. And one of the most important such company is Kotak. We will tell you why eventually, foreign shareholders do want a piece of the Indian banking space, especially a well-run private bank like Kotak. But the point is, it's not just Kotak. There's a whole host of companies where the FII limit gets increased automatically. This was already increased. The MSCI now recognizes it. And when the MSCI recognizes it, the MSCI always gives more weightage to those countries which allow free flow of capital. And now India allowed the free flow as of February, but MSCI is recognizing it now and giving a higher weightage to India, giving higher weightage to many stocks within India. And now the expectation is all those guys will get a lot of FII money. That is the expectation. But what traders do? They will typically front run before the FII comes in. The FII will come in probably only after November 30th when the actual rebalancing happens. That was the Diwali. The early Diwali in the stock markets today is because everyone expects on November 30th, the index will be rebalanced. After it is rebalanced, passive funds which just follow the index will be forced to put more money into India. Okay, that's the background explanation. Prashant, take it away. I guess you have a lot of color, green color in your list.
Lata, is a pretty comprehensive explanation in terms of the background of the whole thing, and I think very well put. Let me just run through the stocks, right? And remember, as you said, this only goes into effect from the 1st of December. 30th close, but 30th is a holiday, so the 1st of December. The announcement of what these changes are comes on the 10th of November. So right now, we don't have the names. These names are what markets are expecting will find place as weight increases or new inclusions. So let's go straight to the stocks because, we've provided the background. A potential MSCI boost. Kotak Mahindra Bank, 12%. That's a new entry into the index. It's expected to have about a 2.5% weight in the MSCI India Index. Asian Paints, 5.6%, that's a weight increase. Shree Cement, 6.5%, that's a weight increase. Adani Green is a new inclusion, 5% higher. SBI Cards, weight increase. Ipca Laboratories, new inclusion, 11.2% higher. And so it goes. Nestle, D-Mart, MRF, Hero MotoCorp, Biocon, Muthoot Finance, which was up 5%, L&T, Divi's, Bajaj Finance. This is basically the sum total of all the stocks, and it's a mix of weights going up or some of them for the first time making into the MSCI index. So that's the MSCI story. But there was the rest of the market as well, and there technology was one particular area which was lower. So Infosys, TCS, Wipro were stocks which were a bit under pressure. Was that because of SAP earnings overnight which disappointed? Probably so, but mostly experts we spoke to did not attribute too much read-through from those earnings to technology companies, maybe some pullback profit booking. And there were some other winners as well, outside of what the MSCI did. ACC, SHRIRAM Transport, Tata Consumer, Ambuja Cement, Trent, Angel Broking, Root Mobile, Thyrocare, and Deepak Nitride. Some of these on the back of stronger numbers. Lata.
Thank you very much, Prashant. At the moment, how much more of Kotak weight will go up or how much more of Nestle weight will go up is guesswork, or is there a master list?
This is not. I mean, this is analysis in a way, Lata. So, it does somewhat fall in the realm of guesswork, but intelligent guesswork, I would say. Because I mean, this is calculated using using publicly available information, and there are formulae to calculate foreign ownership limits, etc. So, on the basis of that, brokerages put out these expectations.
Fair point. Okay, so that's as reliable as it gets. That that kind of money can come into these stocks, provided, of course, they remain attractive. It's not necessary that foreigners have to buy up to their limit. But in a case like Kotak, which is a bank that does so well, chances are that money will come. In any case, today traders were in a mood to believe. Let's get your opinion. The global ambience, as we pointed out, was not at all positive, not at all in favor of equities. We spoke with Mark Matthew of Bank Julius Baer and Company, and he said, I mean, he was speaking to us about India as well. He said he expects a significant improvement in the Indian market because it has been beaten down a lot because of the severe lockdown in the first quarter. Mihir Vora of Max Life Insurance also spoke to us, and he thinks that the good earnings which you saw in the first half of the earnings season are likely to continue.
The Indian market has been surprisingly robust, considering that it is among the countries worst hit by the coronavirus. And on the positive side, what we can see is that the daily cases have been coming down quite sharply for several weeks now, and states like Maharashtra continue to open up. So I believe that we'll move from a stabilization in economic data to actual, significant sequential improvement.
The results have actually been so far quite good in some of the pockets. IT, we all know, the commentary has been good, the results have been good, there's been a good beat on margins. Some of the retail banks have, really improved their commentary in the some of the segments like retail, housing, two-wheelers, tractors, even micro, to some extent gold loans. We are seeing that these are the segments where banks and NBFCs are trying to increase their disbursements. So there is some improvement in the commentary on some of the retail segments and the housing segments as far as disbursements are concerned. Pharmaceuticals, we expect a good set of numbers. So some pockets are doing well. These are the pockets where one should, really focus our attention on.
Okay, so that is basically market opinion and what the opinion makes of things from here out. To the second headline then, Kotak Mahindra Bank rallied a whopping 10%, partly due to being one of the biggest beneficiaries of the MSCI rebalancing, which we just spoke about. It's expected to bring in close to about $500 million. But there was also an underlying trigger from yesterday. This was the very strong second quarter performance, which saw brokerages across the board upgrade earnings expectations and price targets in the stock as well. Abhishek Kothari is here with the details. Abhishek.
Kotak Mahindra Bank in their con call became bullish on the loan growth and also on balance sheet strengthening. So they did mention that they have adequately provided for COVID-19 provisions, and they don't believe that COVID-19 provisions will impact P&L going ahead. So they are conservative on that provision as well, and being ready in terms of strategic change to shifting their focus to the asset side of the balance sheet and gaining customers over there for loan growth ahead. Remember that over the last 4-5 quarters, the loan growth has declined from 15.5% in Q2 FY20 to now a negative 4% on a YY basis. So they were conservative earlier and now are focusing on loan growth ahead. They are also seeing a regionally strong traction in AMC business, investment banking, life insurance, etc. Brokerages are bullish on the stock. They have increased their earnings estimate as well as target price. So the target price, which was earlier between 1300 to 1570, is now increased to 1570 to about 1750 per share. Morgan Stanley in its note has also mentioned that on account of MSCI rejig or the changes in new free float being created, they expect an inflow of about 9,650 crore for Kotak Mahindra Bank alone. Back to you.
Oh, that's a lot of money, isn't it, Abhishek? Thank you very much. So it was both a good bank reporting good numbers and foreigners can buy those shares. So all that added to this huge rally, very, very unusual in a stock that is already pretty expensive and, a four-figure amount of already 1,000 rupees. Now we come to the third headline. Nifty Bank soared 3% as many banks are likely to be beneficiaries of the MSCI rebalancing. Not banks, just even NBFCs are likely to be beneficiaries. Separately, many banks and NBFCs are also saying that there is smooth completion of the interest waiver issue. We will come to that issue in just a bit and explain. First, let's listen to what CRISIL told us. CRISIL said that under the scheme, banks and NBFCs will get 7,500 odd crore rupees from the government, which they have to pass on to borrowers. Y.S. Chakrabarti, the managing director and CEO of SHRIRAM City Union, also spoke with us. And he also thought that this scheme would benefit his company. But he was only hoping that customers understand that government is not paying their entire interest. They're only paying the interest on interest delayed for 6 months. Listen to what they had to say.
The payment is going to be in the nature of an ex gratia payment, which is calculated as a difference between compound and simple interest for the 6-month period for all eligible borrowers. There are 8 product categories and the loan amount has to be less than 2 crores. And our calculation sets this number at around 7,500 crores, the total amount between banks and NBFCs, and roughly split 50-50 between banks and NBFCs. NBFCs having a little higher share. Our sense is over 40% of system credit, which is loans in excess of 40 lakh crores, will get this benefit.
Back of the envelope calculation, I think it will be around anywhere between 80 to 90 crores is what we may have to claim from the government. 1. 2 is it's a straightforward process. I mean, crediting the customer account should not be a major issue. It's a simple thing that can be done. The only thing is you're submitting your claim, and when the government pays you back is a question that right now we'll have to wait and see. It's critical, I think, for our industry or banks is to make sure the customer understands that this is only, the government is paying only for 6 months and it is not paying for the extended tenure.
Lata, this is now, I mean, brings some closure to the entire issue, although there is the issue of reimbursement, but I mean, you know, it's more settled now, right?
Yes, it certainly is, because this was such an unnecessary overhang on banks. And just for those who have not been following this case, I'll explain that when the RBI granted moratorium, what it said is you don't have to pay in whatever your interest plus principal for 6 months. But when you don't pay for 6 months, it accrues an interest, right? That, along with the moratorium amount, the amount during moratorium will have to be paid in subsequent EMIs. Now, one person took the banks to court, and the court said, oh, you're giving them a moratorium and you're asking them to pay interest on that amount. That's not fair. It sounds like a penalty. So at the end of it all, the government of India said, you know, banks need that interest because they have to pay it to the depositors. The depositors have to be serviced, whether you, give the borrowers a waiver or not. A depositor keeps money only if he gets interest on it. So at the end of this long story, the government said, okay, we step in and we will pick up the tab for interest on delayed interest payment during the 6 months of moratorium as a welfare gesture. But that will be available only for loans under 2 crore. Now, today that process, as Prashant said, came into fruition. Government announced the rules a couple of days back. Today, RBI issued a one-line notification telling banks to adhere to the government notification. That is, banks have to deduct the amount of compound interest, interest on delayed interest payment from the account of those who sought moratorium and even those who did not seek moratorium. Even they will be eligible because there could be otherwise someone taking you to court. So all these guys, you count how much the interest on the delayed interest payment would be, make a list, send it to the government, and the government will reimburse the banks and the NBFCs. So those who have not paid interest for the 6 months will not be penalized to the extent of the interest on interest proportion. Those who have been servicing their loans will get some kind of a relief in future months. That process of the banks having to present the list by November 5th to the government today was announced, and therefore it ends all uncertainty. Chances are that I think the hearing is on November 5th. The entire process will be presented to the court, and the court will hopefully say kosher ticket and the case will be closed. So basically, the big relief for banks and NBFCs is the uncertainty is over. The second relief is that, many people who took the moratorium may have defaulted. Now the interest part at least is being paid by the government. Even if they default, they will default on the principal. So that is also an added relief for banks and NBFCs. That was part of the reason for the rally. Part of the reason is what Prashant and I have been explaining. It is this big MSCI rebalancing. Many NBFCs are also in that list and could get more FPI inflows.
Nada, thanks for that. So, yeah, I mean, you know, the main trigger could be MSCI behind the 3% Bank Nifty move. But, I mean, this some sort of closure to this interest on interest matter doesn't hurt either. It's time for a quick break here. Stay tuned. We are back quickly on the other side. More headlines, more opinion follows.
Welcome back. You're with us on Markets Today. We told you about that huge up and away rally that the market saw. The market was also blessed with a lot of corporate earnings, and one of them was Bharti Airtel. It came out with its second quarter numbers, but post market hours, and it beat expectations. Reema Tendulkar is our resident expert, and she has all the details. Reema.
Thanks so much for that. Yes, the consolidated numbers of Bharti Airtel are a beat. They've reported a consolidated revenue growth of 7.7% on a sequential basis. Margins have expanded to 46% versus 44.4%. The company continues to report a loss. So at the bottom line, there is a loss of 763 crore. But if you strip out all the exceptionals, there is a profit of 750 crores. So now Bharti has actually reported a beat on the Africa numbers, which we already knew. They were reported last week, but they look good. The India wireless numbers too are reporting an improvement after the hit that they had in Q1 on account of lockdown. So the India wireless metric, 7.4% revenue growth. The estimates were of a 3.5% growth. The company has improved its margins as well for the India business. So margins have gone up by 200 basis points versus expectations of 50 basis points. The reason for the margin improvement is one, the pricing or the average revenue per user has gone up by close to 3.5% on a quarter-on-quarter basis. So that is adding. And plus, the company continues to gain 4G subscribers as well as cost optimization measures. So all that is aiding the margin improvement performance for the company. The 4G performance has also been very healthy. The debt continues to remain on the higher side. That is a concern. And of course, the AGR judgment, we still have, the company, we still have to get the closure on the AGR judgment. That remains an overhang. But purely on the numbers, it's a beat. Consolidated numbers higher than estimates as well as the India wireless performance. Back to you.
All right, Reema, the stock has been a huge underperformer, so maybe we do see some attraction tomorrow. Well, we move on to the fifth and the last headline. Then even as two-wheelers see softness in festive demand, four-wheeler makers Hyundai and Kia tell CNBC-TV18 that sales during the Navratri are sharply higher this year, and keeping up with demand is actually posing a challenge. It's a good kind of a problem to have. Let's listen in to both those managements.
The momentum gained during the last 2 months has continued during these Navratras as well. And as we speak and as the numbers come in, the retails are close to 25% more than last year. Cities also, we saw a very good traction, and across the north, central and west of India, and of course, even east of India, we could see some very good traction. Even post the SHRIRAM, which was yesterday, we saw some very good bookings, which I think augurs well for the next 20 days as well.
We are hard pressed to keep up with the demand because the waiting right now is around a month and a half to 2 months in some cases. So we are ramping up the production extent possible to meet the demand. So we were actually just about, I think, 2 months old last year when we started off. So in comparison, the growth in bookings in retail is in the order of 180 to 220%. So we are getting very good traction here and very good walk-ins in the showroom. So we are very enthused about this season.
Okay, that's the word from the four-wheelers. The mass motorcycle segment perhaps didn't do well, but there's some big news here. The American motorcycle giant Harley-Davidson and Hero MotoCorp have just announced a distribution partnership for India. Hero MotoCorp will also develop and sell a range of premium motorcycles under Harley-Davidson brand name. Parikshit Luthra, our colleague from Delhi, has picked up all the details and he's here. Tell us, Parikshit.
Well, this is a big story, of course. Hero MotoCorp had been scouting this relationship for a while now. They had been mum about it. But finally, a distribution cum development partnership has been announced. And this is what Hero had been looking for. This is the reason why the talks took so long, because Hero was looking for a technology sharing and a strategic partnership. There is no technology sharing here. But what we can tell our viewers that Hero MotoCorp, under this partnership, will be developing a range of mid-capacity premium motorcycles, which will be sold under the Hero brand name and Harley-Davidson brand name in the Indian market initially. And there is a door open for selling these premium motorcycles under the Harley brand name in global markets in future. So this is likely to give Hero MotoCorp a reach in global markets in future as well. And also, we're told that Hero MotoCorp will be distributing and also servicing Harley-Davidson motorcycles and merchandise in India.
Okay, thank you very much for that, Parikshit. So this is perhaps more than what the market had anticipated, that they'll be able to develop Harley-Davidson motorcycles and even sell it in the global markets, perhaps was not known. So perhaps some cheer for the markets tomorrow. But we wrap up on this edition of Markets Today. Thank you for watching.